Hey, what is going on? It is Crypto Bobby. Hope you're having a great day, great night, wherever you're watching in from. And today I want to talk a little bit about the valuations of cryptocurrencies, crypto assets, and what we might see over the year of 2018. Are we going to see just a significant correction at this point in time? And are these valuations outstretched? Or are we really at the beginning of a massive bull run in crypto with the influx of Wall Street and institutional money and all these kind of new basically places of money to come in outside of just simply retail investors that have been, for the most part, the primary driver of a lot of this influx of valuation for crypto. So we'll hop into that today and also just kind of give my general thoughts as far as some of the irrationality of the market. I've talked about it before, but I think it's really important to continually talk about it because these markets just are not rational. They're not. And anybody who wants to provide some reasoning for why they're rational or why they're not, I'll point to one thing, and I'll point to one thing only: Dogecoin. I mean, Dogecoin right now. I joked about it on Twitter before, but I bought $300 of Dogecoin back in 2014. Bought $300 worth of Dogecoin. At the time, it was about 1 million Doge. Kind of as a joke, left it on my laptop. That $300 worth of Doge is now worth $17,500, with Dogecoin being worth over, at the present time, $1.7 billion. Now, Dogecoin hasn't had a major software update in kind of basically multiple years. Most of Jackson Palmer, one of the founders, is no longer kind of with the project, and a lot of the community excitement around it it's kind of fizzled out from back in the 2013, 2014 heyday of how awesome Doge was, which was, by the way, the reason I got into cryptocurrency. It was one of my favorite things out there. If you weren't around 2013, 2014, when Dogecoin was big, it was the coolest, most inclusive, most enjoyable, most fun crypto thing on the planet. I loved it. Still might be my favorite part of crypto of all time. But there's just no way on God's green earth that Dogecoin should be worth $1.7 billion in market cap and should be basically 2 cents per Doge right now. It's crazy. But it is what it is. And that is, I just think that goes to show a level of market exuberance. I think Jackson said that as well. You can kind of look at the price of Dogecoin as a gauge of how exuberant the market is about Bitcoin, about a lot of these altcoins. And I think with Doge just crushing it right now, up 41% today alone, 24%, 4% off its all-time high, up 4,000% in the last year. That goes to show how irrational these markets are and how, you could put every type of traditional valuation, you could put every type of intelligent methodology, you could look at GitHubs, you can look at the community, you could do this, you could do that. Doesn't necessarily make a difference. It really doesn't mean all that much in a lot of cases. So we'll get into it today and we'll talk about a lot of kind of what that might mean. And a couple different comments that I saw on Twitter recently, and this one was, I thought, really fascinating, and I think there might be a little bit more room to potentially explore this, but so Citi, obviously a large financial institution, bank. There was a tweet out from this Robin Wig that said, Citi estimates that inflows of less than $10 billion in 2017 accounted for the cryptocurrency market cap exploding from $20 billion to $500 billion. Basically, they said that they with the current prices to maintain or to be sustained, they reckon that about $25 billion of fresh money has to go into the crypto markets to sustain the level of valuation that crypto is at right now. So we'll pop this open. There's a couple more interesting kind of tidbits from that, but basically, yeah. So Citi said, hey, cryptocurrencies in 2017, we estimate probably about less than $10 billion of net inflow was provided into the market. And then for the current prices to actually be sustainable, we need to have about $25 billion of money, of fresh money, of net inflow go into the crypto space. Although they mentioned within 2018, they believe that to be quite likely and actually to be exceeded, and expecting Bitcoin to continue to make gains. But for some of these larger altcoins, it's kind of funny to hear Citi talk about altcoins, but for some of these larger altcoins like Ripple and Ethereum to outperform, although they struggle to find kind of the longer term question of which cryptocurrencies, which crypto assets are going to be the answer. And they break down kind of 3 plausible long-term roles for crypto as anonymous payments, stores of value, and general means of exchange. Those being the ones that potentially carry the most weight from a financial or from an investment perspective, which number one, I would say is fairly bullish for, like we've talked about before, private cryptos, anonymous payments, whether it's Monero, whether it's Zcash, whether you're still banging on that Verge door, whether it's Nav, whether it is Dash, whatever it might be, anonymous payments. A large company out there like Citi is saying, hey, that's a legitimate long-term use case, long-term role for this asset class. Another one is store of value. I guess you would consider that Bitcoin right now. I think that's what a lot of people are talking about, Bitcoin being as a store of value. It's a store of value, I guess, until it's not. So I don't really, the store of value, I think, is a harder one to define, at least in my mind, is like, what is specifically a store of value in crypto? Is that Bitcoin? Is that something else? And then general means of exchange. Is that Litecoin? Is that Dash? Is that, who knows? What is a general mean of exchange? Which ones are those specifically transactional cryptocurrencies? And then also a lot of the complex issues around custodialship, KYC, anti-money laundering, regulation. Will that hinder the development of a marketplace? So I thought some actually pretty interesting comments from Citi, and I've seen commentary like this before. I think a couple other banks had put something out where they said maybe only $5 billion of money actually went in 2017 to the crypto market that drove it all the way up to the prices it's at right now. And it goes to show, I guess, how, number one, I think the impact of holders, like there are a lot of people out there that have been holding on to Bitcoin, and a lot of these other assets. And that does, I think, tend to drive up the price in a lot of respects, because while there is a circulating supply, how much of that is actually circulating? How much of that is lost? How much of that is just being held onto in cold wallets is really not looking to be circulated for quite some time. So I think that is a fairly interesting point. The one thing I would also say too is I always talk about institutional money and kind of what that might mean and how that's going to develop things moving forward. And whether you like them or not, Coinbase, Brian Armstrong, they were talking recently about Coinbase custodianship, and I think he was on Bloomberg, and he was saying that there's an estimate of $10 billion of hedge fund and institutional money that is literally hedge fund, family offices, institutional money that's literally sitting on the sidelines waiting to get into cryptocurrency. And that is, if you can imagine, $10 billion of money of net inflow took crypto from $20 billion to all the way up to $500, $700 billion in 2017. That $10 billion of institutional money is definitely going to be necessary, but could also continue that uptrend. So should be interesting to see how that ends up panning out, and if the money that comes into the space, if there's going to continually be that flow of money. And I would also say, even from the retail side of the house, Bittrex is just getting swamped right now. Bittrex is closed to new investors. Binance is also closed to new account registrations now as well. So it's like there is a huge collection of people, I think, that are on the sidelines right now. They're like just hungry to get in. Whether or not that means all that much, who knows? But it's pretty fascinating to watch in real time. And I'll say this too. So I'm looking at the assets right now, and at least on on-chain FX, they say the total market capitalization is $742 billion right now. The total market capitalization on CoinMarketCap is $805 billion. So we have almost all the way to, not almost all the way, but pretty close to $1 trillion in crypto market. I remember making these videos back in August, back in September, when crypto was at some points in times under $100 billion in market capitalization, and now we're up to $800 billion. So the massive movement upwards has been nuts. It's been crazy to see, and it's obviously been heavily driven by speculation. And I think a lot of people are looking at this now, and even within the past 6 months, I mean, if you got in the summer of 2017 and you haven't 8 to 10x'd your money, you're probably doing something significantly wrong. And I think a lot of people are looking at this now and saying, like, this market is bound for a significant correction. It's got to happen. It has to happen. And part of me definitely thinks that. Honestly, part of me thinks like there is going to be a huge correction, and it's going to hurt a lot of people, and it's especially going to hurt a lot of number one, retail investors and probably institutional investors who get in at the top of this market cycle for the time being. But somebody mentioned this recently. I think it was on the Crypto Street podcast. I liked it. I think I've heard it before as well, but I'll give those guys a shout out. They have a good show. But somebody said in the Crypto Street podcast, the trend is your friend until it's not. Right now, the trend is upwards. The trend is bullish. It is a bullish trend, and for you to try to call the top, what happens is, okay, I'm calling the top. These markets are unjustified. We got Dogecoin at 1.7 billion. We have all these crypto projects out there that don't even have a fully functioning product or aren't widely adopted, and they're multiple billions of dollars, blah, blah, blah. You sell, and then it continues to go up and up and up and up and up. And that's a frustrating thing to, I think, especially as a retail investor. I'm sure some of the more like sophisticated institutional guys are fine potentially seeing that if they know the risks are much greater than potentially the rewards. But I think really right now the trend is your friend until it's not. At this point in time, it is a bullish trend. And until that changes, until that literally switches around, then it's tough to sit here and say, you know what, we're at the top. I mean, could $1 trillion be that top for the marketplace, and then we see a big correction? Yeah, maybe. Could it be 2 trillion or 5 trillion? Maybe. Could it be 10 trillion? I have no idea. These markets are incredibly hard to predict, and a lot of people, I feel like I get these comments all the time. It's like, yo, you always comment on past events. You always, a lot of times you're not as forward looking. It's because I don't have a freaking crystal ball in front of me. This microphone and this pop filter that works like half the time because it's a $10 pop filter from Amazon. But this thing is not a crystal ball. I can't look at it and say, oh yeah, the price of Bitcoin is going to XYZ. I can speculate on that. I can try to think, and I can put my money in places where I think it has the best potential to increase in value significantly over time in comparison to either Bitcoin, or if Bitcoin is going to lead the charge in, kind of heavily weight myself in Bitcoin or go short the market at some point in time. Who knows? But it's really hard to, I'm sure a lot of you guys know, it's incredibly hard to speculate on this market, but the trend has been extremely bullish for the time being. The one thing that I will say is that, and trying to be as forward-looking as possible here, that there is going to be a correction at some point. There has to be. But calling the top of that is getting increasingly impossible. And people have been trying to call the top on a correction for the past 6 months, 7 months, way back, basically the entire 2017. And every time you've done that, you've gotten dirt thrown in your face and you've gotten embarrassed because it hasn't been a top and it's gone up 2, 3, 4, 5, 6, 7, 8x. And you missed out on a ton of gains and everybody laughs at you on the sidelines. So I'm not trying to call the top here by any stretch. I'm just saying that I think in a lot of respects, these valuations are overstretched. And I am looking at just how exactly, what is going to be the best way to protect myself if the market goes down pretty heavily. Like, is there going to be a solid way to protect myself if the market just goes to absolute crap? And I mean, for me personally, just trying to have some type of a level of safeguards, even if for me personally too, I mean, even if the market has a 95% correction, I still won't have lost my initial investment. That is not true for people that have gotten in November, in December, in January. And for that, I also want to just kind of talk about this in general, because there are so many people out there making videos that Bitcoin is going to $100,000. Ripple's going to $20, this, that. Yes, they could do that, but they could also cut in half. And if you're brand new to the space, if you got in November, December, maybe October, September, whatever it is, you might not have gotten in early enough to the point where those losses don't hurt as bad. And to that point, yeah, I could, the market could have a 90% correction and I would still have my initial investment there. That doesn't mean I didn't just lose 90% of that value. So what type of safeguards can I put in place? And to be pretty frank, I'm talking to different people that are smarter than me and trying to figure out what the best ways to hedge things are and the most intelligent way to move that path forward. I personally don't have a solid plan in place yet, but as I'm just seeing these valuations go up and up and up, and it's fantastic because you log into Blockfolio, you log into Delta, whatever it is you use, and you see, oh, it's up 5% today, it's up 10% today, 5, 10, 20, whatever it is. It's awesome. It's ridiculous. It's crazy. But at the same point in time, it's spinning. At some point, the music has to stop and reverse. And if it does, are you prepared, or are you just going to totally freak out? And I don't want to be the person that totally freaks out. I want to have a clear plan in place. I want to have preparations in place for if anything negative happens, and not to hop on. That hurt. But not to hop onto anything negatively at all. But I just think it's important because there are a lot of people that build up this FOMO, and then there are so many new people that get into the space, and then they'll be the ones left holding the bags. And you don't want that to happen. I want everybody to be, at least, my goal with the channel is to provide just commentary in general, to help kind of walk through my experiences in this space, but also to provide any type of insights that I glean from anybody else. And I think that, it's responsible investing in the crypto space is kind of an oxymoron because there's really no responsible investing in the crypto space. But at the same point in time, if you get to a point where, taking profits is going to be a life-changing thing for you, take a little bit of profit. You don't want to have the opportunity to pay off your entire mortgage, or to just pay off all the debt that you have and all this stuff, and then have that opportunity, and then 6 months from now, that is completely gone, or something like that. So I just think you want to be as intelligent as possible, have some plans in place. And I'm not saying exit the markets by any stretch. I am still, all the fiat money that is in crypto that I want to be in crypto, it's in, and I'm, again, the trend is your friend until it's not, and I'm playing that trend until something changes, and I'm not trying to call a top, and I'm not doing that. I am just getting, as the market goes up and up and up and up, I'm just getting increasingly more wary that something could potentially bring that market in a really negative movement. So that's kind of my overall thoughts on the day as I've continued to log into things like Blockfolio or Delta and just see the market move up and up and up. And even, in that sense, like in the past couple of days, AirSwap made a ridiculous run. 0x up 30%. VeChain up another 25%. You got Zcash up 20% today. Bitcoin obviously was up 10, 15% the other day. There have been massive movements, and we can even go over to CoinMarketCap, and you can see the level of pumps that some of these crypto coins have had. Siacoin, which was almost left for dead a while ago, is now pumping to the moon, back up above a $3 billion valuation, almost hitting 10 cents, up 100% in one day. You got both Binance and Qcoin killing it, which is pretty cool. Walton Coin Kin, everybody's favorite, Electronium going to the moon. Electronium going to the moon right now. Z Classic also making some big moves there as well, and that was one that I've had some friends talk to me about and never actually made the move into Z Classic. Probably an unfortunate thing that I didn't, because that is, from what I was looking at, that was at $100. That's up to $184 right now. Substratum again making a pretty solid move. So pretty impressive day in the overall marketplace. But I think as these assets continue to go up and up and up, and your net worth hopefully is going up and up and up with them, just have some plan in the back of your head. This could certainly last. This bull run could last for quite some time, or it could be cut pretty short. So just be prepared in case it does, and make sure that you are all set if the wheels stop spinning for the time being, and we head off into more of a bearish market cycle for the long term. And you simply just have to look back at 2014, 2015, 2016 to see that. If you weren't around back in crypto for that, the big crypto bull run of late 2013 into early 2014, and that really market dead cycle from 2015 to 2016, study that, look at that, because trees don't always grow to the sky, and I don't want to give anybody the impression that they do. So I'd like just for everybody to be as cautious as possible with that. Outside of that, guys, if you are new to the channel by any chance, my name is Crypto Bobby. I do daily videos on the subject of crypto, as well as YouTube live crypto happy hours, where I just kind of hang out, have a drink with you guys, talk a little bit about, sometimes I'll have a guest on, or I've started to have some guests on, but most of the time it's just me hanging out, having some drinks, talking to you guys about what's happening in the marketplace. But really do appreciate all of your time. If you have any questions, definitely sound off in the comments. Look forward to interacting with you guys down there. Crypto Bobby signing out. Peace.